Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the Russian economy, and specifically to look at a paper that was posted recently by the US Department of the Treasury looking at the impact of the sanctions on what's going on in Russia. Now, this paper highlights the fact that Russia is now being impacted by three different forces that are acting in concert. The first is the war itself, which is obviously proving to be a drain on Russian reserves. The second is the sanctions that have been applied against Russia. And the third are the policy measures that have been introduced by the Russian authorities in response to those sanctions. And this paper looks at all the different aspects of the Russian economy. So we'll have a look at what's going on with GDP. We'll look at what's happened with exports and imports. We'll talk about what's happening with emigration and the ruble, what's going on with Russian policies, and what the impact of all of this will be on the outlook for the Russian economy for 2024. So after we've been through all of that, I'll wrap up with my summary as to what I think is actually going on in Russia right now, what the impact of the sanctions is continuing to be, and what's likely to happen over the course of the next 12 months. But before we get started on all of that, I'd like to say once again, thank you so much to everybody that's supporting the channel. If you bought me a coffee, sent me a YouTube super thanks, or signed up as a patron or a member, you're really helping to keep the channel going, so thank you so much. The US Department of Treasury recently posted a paper entitled Sanctions and Russia's War, Limiting Putin's Capabilities. And the objective of this paper was to look at three different factors. Firstly, the impact of the sanctions that have been applied against the Russian economy. Secondly, the impact of the war itself, the drain in cash flow that Russia is having to divert into all of that war effort. And thirdly, the changes in policies that Russia is introducing in response to those first two issues. And if we start off by looking at this chart, which shows the original forecast for Russian GDP that was put together by the IMF in 2021, so before Russia's invasion of Ukraine commenced, and compares it with the actual performance of the Russian economy after the application of the sanctions that have been applied against Russia. And the scale on the left-hand side of this chart is actually an index, which goes from 96 at the bottom to 112 at the top. And the 100 level, which is shown by the horizontal black line across the bottom of the chart, represents the position for 2021. So that's basically taking the 2021 actual GDP figure for Russia as the benchmark position. Now, if we start off by looking at the blue line, which is the original GDP forecast put together by the IMF back in 2021. So this line is basically showing us what Russia was expected to achieve if it hadn't have invaded Ukraine. And as you can see, the index goes from 100 in 2021 up to 104 in 2022, which indicates around 4% growth. It was then expected to increase to around 107 in 2023, indicating a further 3% growth, and rise to around 109 in 2024, indicating further growth of around 2%. However, if we now have a look at the orange line, which shows us what's actually happened following the introduction of the sanctions, you can see that in 2022, the index actually fell to around 98, which represents a fall in GDP of around 2%. In 2023, the index returned to 100, representing growth of around 2%. And in 2024, it's expected to rise to around 101, representing growth of around 1%. And if we now take a step back and look at the divergence of these two lines, you can clearly see the impact of both the war and the sanctions on the Russian economy. GDP is down significantly against where it was expected to be for 2023 and 2024 by around 7 or 8 percentage points. And when you consider that the Russian economy delivered GDP in 2021 of around 1.8 trillion US dollars, 8 percentage points represents a fall of around $150 billion. And that is a serious amount of cash, particularly when you consider the amount of money that Russia is actually investing into the war. So this is having a double whammy. GDP is going down at the same time as expenses are going up because Russia is diverting more of its resources into the war effort rather than growing its own economy. Now, clearly one of the biggest single impacts on the Russian economy have been the trade sanctions applied against Russia, particularly the embargo on oil and also the price cap that's been applied against Russian oil products, but also the fact that many countries around the world are no longer buying Russian gas. But it's not just exports where Russia is suffering, it's also suffering with regards to imports. So let's have a look at the data provided in this report with regards to what's happening with exports and imports. This chart shows the year-on-year percentage change in Russian trade flows dating back to January 2021. And just as a reminder, the war in Ukraine started on the 24th of February 2022. The scale on the left-hand side of this chart goes from minus 60% at the bottom to plus 80% at the top. The blue line represents the value of Russian exports, and the orange line represents the value of Russian imports. And what this chart shows is that back in January 21, Russia was actually importing more than it was exporting, and the reason for that was the COVID-19 pandemic. During 2021, a lot of countries imposed severe lockdowns, and that reduced the demand for oil and therefore the value of Russia's exports. However, as you can see from the shape of the blue line, between January and June 2021, there was a rapid increase in demand, and the value of Russia's exports increased significantly and actually overtook the value of the imports. Between June 21 and January 2022, things started to return back towards a more normalised level of trading. And although the rate of increase of Russia's exports started to reduce, they were still increasing at a significant level. And in January 2022, Russia achieved year-on-year growth of more than 50%. However, if we now look at what happened to the value of Russia's exports between February 22 and March 23, you can see that there was a significant downward trend. And in the summer of 2022, the value of Russia's exports actually started declining. It moved into negative territory. And of course, this was as a result of the impact of the sanctions. Many countries around the world decided that they no longer wanted to buy Russian oil. And as a result of that, Russia had to start selling significantly higher quantities to India and China at a reduced price. They were offering a discount, and therefore the value of their oil started to fall. And at the same time as that was happening, there was also a downturn in oil prices globally, which meant that overall everybody was selling their oil for a lower price. Russia was selling it at an even lower price because they were discounting against the market value, but everybody was impacted. So you can see the direct impact of the sanctions on Russia's revenue streams over the course of that period. And if we look at what happened during the rest of 2023, you can see that there has been a continued reduction in the value of Russia's exports. As the blue line continues to sit in negative territory, Russia is continuing to see a year-on-year fall in how much money it's making from its exports. If we now have a look at what's happened to imports, in the period between January 21 and January 22, you can see that the orange line moved roughly in parallel to the blue line. So basically, this was just a reflection of what was happening globally. Russia was seeing a large increase in the value of its imports as a result of the fact that it itself was coming out of lockdown, and so there was an increase in demand, and so Russia was importing more products. If we now look at what happened between February and May 2022, there was a sharp decline in the value of imports. And the reason for this was that a lot of countries imposed sanctions against Russia, both financial and trading. And as a result of that, Russia found it difficult to actually import goods. And as a direct result of those trade embargoes, Russia had to start finding alternative suppliers to change its supply chains, buy things not from the West, but more from Asia and the Far East. And in the second half of 2022 and the first part of 2023, the position started to improve, so you can see that there's an upward movement in the orange line. However, it's still sitting in negative territory. So year on year, the value of the imports continued to fall, albeit at a reducing rate. And I think one thing that's very interesting about this chart is that at the end of 2022, the percentage change in the cost of the imports actually overtook the percentage change in the value of the exports. So in relative terms, Russia was spending more on its imports than it was increasing the value of its exports. And obviously for a country like Russia, which is a net exporter, that isn't a good situation. It doesn't want to continually keep increasing the amount it's spending on exports while the value of its imports is going down, because at some point in the future, that would obviously mean that Russia was spending more than it's earning. And one specific point raised by the US Department of Treasury in its report is that Russia has also struggled to access key inputs needed for its war due to the US and other partners' sanctions and export controls that limit its access to key technologies. Russia is not able yet to domestically manufacture advanced weapons and is now becoming more isolated and relying on individuals and entities that are willing to resupply its military. Another major negative factor that the war in Ukraine has caused in the Russian economy is the emigration of people, the loss of key workers and people that it needs to keep its industries growing. And this chart records the number of people emigrating from Russia, so leaving the country permanently, dating back to 2008. And the scale on the left-hand side of this chart goes from 0 at the bottom to 800,000 at the top. And what this chart shows is that in 2022, a record high of 668,000 people left Russia, which represented a 71% increase over the prior 5-year average. And in 2023, it was estimated that a further 500,000 people left the country. So in total, between 2022 and 2023, almost 1.2 million people left the country. And as we've discussed on previous videos, the people who are talking with their feet tend to be higher educated, higher skilled, and more senior management. So they are the more valuable people to the Russian economy. These are the people that Russia needs to keep the economy growing. And when you lose all of your key people, in addition to the fact that a lot of multinational companies also upped sticks and closed down their operations and took with them all of their overseas workers who'd been deployed there to help develop the Russian economy, this had a huge impact on the Russian economy and its ability to continue growing. Now, if you follow the channel, you'll know that we've talked at length about the impact on the Russian ruble of Russia's invasion of Ukraine. It has been an absolute disaster. The ruble has collapsed in value over the course of the last 18 months. It is trading at a significantly lower level than it was on its long-term average. And this is having a double whammy impact on the Russian economy. Firstly, there is less purchasing power for the ruble. But secondly, and probably more importantly, nobody wants to deal in the ruble. Nobody wants to do any trade in rubles. At the start of the war, President Putin made a concerted effort to try to introduce the ruble as a competitor against the dollar, as a petrocurrency. So when people were buying oil, he wanted them to pay in rubles so that the ruble became a much used currency all around the world. But the impact of the sanctions and the fact that the financial sanctions meant that banks didn't want to deal in rubles meant that other countries who weren't applying sanctions decided that they didn't want to take the risk of sitting with lots of rubles. So India and China, who are now the main trading partners for Russia, only want to deal in their own currency. Now, Russia did refuse to deal in Indian rupees, and as a middle ground, India has been doing trade either in Chinese yuan or United Arab Emirates dirhams, but again, that's not helping the ruble. So let's have a look at what the data in the paper says about what's going on with the ruble. This chart plots the exchange rate between the Russian ruble and the US dollar, dating back to January 2021. And the scale on the left-hand side of this chart goes from 110 rubles to $1 at the bottom to 30 rubles to $1 at the top. So if we start off by looking at the exchange rate in the 12-month period before the war started, you can see that the ruble was trading at around roughly 75 against $1 throughout that entire 12-month period. So that gives us a good benchmark as to the average level that the ruble was trading before any impact of the war hit the currency. If we now look at what happened during 2022, the financial sanctions were introduced almost immediately following Russia's invasion of Ukraine, And you can see the sharp impact that that had on the value of the ruble. It nosedived to more than 100 against the US dollar in a very short period of time. Now, President Putin was very unhappy about this situation, and he instructed the Russian central bank to do something about it. The Russian central bank stepped into the markets and started buying rubles to drive up the price. And at the same time as that was happening, a lot of countries stopped dealing in rubles. So the market reduced dramatically at the same time as Russia was buying the currency. And as a direct result of that, the ruble strengthened in value significantly. And by the summer of 2022, one US dollar was trading for around 50 Russian rubles. However, that situation was not sustainable because the Russian central bank needs to divert a lot of its energy and resources to other things affecting the economy. So as you can see, over the course of the last 18 months or so, the value of the ruble has declined significantly and is currently trading at a value of around 90 rubles to $1 US. And if we take a step back and compare where the ruble is today against where it was in the 12 months prior to the start of the war, you can see that there's been a significant reduction in the value of the ruble. And anybody that thinks that there hasn't can't read a graph. This chart shows Russia's oil and gas revenues. The bar on the left-hand side shows Russia's revenue before the oil price cap of $60 per barrel was applied against Russian oil, and the bar on the right-hand side shows the revenue following the introduction of the cap. And the scale on the left-hand side here is measured in billions of US dollars and goes from 0 at the bottom to 140 billion at the top. And what this chart shows is that in the period between January and October 2023, Russia saw a 40% decline in its total revenue compared with the same period from 2022. And according to the report, the decline in Russia's revenues was as a direct result of Russia's need to introduce discounts on their exports as a result of the sanctions, which combined with the decline in global oil prices during 2022 and much of 2023 had a devastating impact on Russia's income. Now, interestingly, the report went on to say that the Russian government has undertaken several policy responses to try to address the reduction in oil and gas revenue, including changes to tax policy and the utilisation of the National Wealth Fund. Dispersals from the National Wealth Fund, windfall taxes and domestic debt issuances are covering the deficit in the near term, but the combination of the increased use of the Wealth Fund and multilateral sanctions are depleting it, and the National Wealth Fund currently sits at around $146 billion, nearly half of which, around $72 billion, is sitting in Chinese yuan and gold. The immobilization of around $280 billion in Russian reserves that were previously sitting in the National Wealth Fund and central bank sovereign assets by the USA, the European Union and other sanction partners leaves Russia without access to an important buffer. And as a result of monetary financing and other factors, including a tight labour market, annual inflation has risen rapidly in Russia over the past few months and will continue to apply more pressure on the Russian economy. One of the most damaging impacts on the future growth of the Russian economy has been the withdrawal of foreign investment. We have seen hundreds of multinational companies exiting from Russia after a period of 20 to 30 years of long-term investment. And this is leaving Russia in a difficult situation. Firstly, it doesn't have the capital to be able to continue with the level of investments that it's seen historically. But secondly, and probably most importantly, it doesn't have the level of expertise to continue growing all of those businesses at the same rate as it has done over the past few years. And both of those factors are likely to have a seriously damaging impact on Russia's ability to compete on a global scale. This chart shows the amount of foreign direct investment into Russia in billions of US dollars dating back to the end of 2016. And the scale on the left-hand side of this chart goes from minus $25 billion at the bottom to plus $25 billion at the top. And what this chart shows is that between the end of 2016 and the end of 2021, there was significant net investment into Russia from foreign investors. You can see that the vast majority of this chart during that period is sitting in positive territory. And in many of the years, the scale of the investment is in tens of billions of dollars. However, if you look at the situation from 2022 onwards, you can see that there has been an enormous exodus of investment out of Russia, measured also in tens of billions. And when you take a step back and look at the overall picture here, you can see the problem that Russia is facing. Because Russia is still a developing economy. It needs to invest into its industry and develop things further. So it needs to find capital. It needs to find partners to help it with that development. And over the last couple of years, it's gone into reverse. And when you look at the scale of the exodus, it's actually wiped out all of the investment since the start of 2020. So this has basically put Russia back around 4 years from a financial perspective. But actually, when you think about the loss of expertise and technology, this has put Russia much further back. And in addition to those factors, it's also lost its trading partners, because there's no point developing your industry if you can't actually do anything with the finished products. You need to have markets to be able to sell into. And Russia's options in terms of its exports are now severely depleted. So what's the summary and conclusion today? Well, I wanted to post this video because I think this report that's been put together by the US Department of Treasury is really interesting. It tells us what the overall impact of the sanctions and also the war effort and also the policy measures that have been introduced by the Russian authorities have had on the Russian economy. And when you take a step back and look at the data that we've been through in today's video, you can see just how damaging this war is on both Russia's economy today, but also on the future of the economy. The overall summary of the paper that we've talked about today is that the Russian economy has changed its perspective from being consumer driven to being defense focused. It's now targeting the war in Ukraine. A lot of industries in Russia are building and helping things that are going towards that war effort. And what that means is that it's going to be more expensive for Russian individuals, because it's no longer just about supply and demand and making profit and having a nice existence. The focus of Russia has changed. That's increasing the cost of living for a lot of its people. It's driving up things like interest rates, which obviously pushes up the price of loans both for individuals and also companies within Russia. And because of the focus on defense, a lot of industries are being moved to look towards making things that are going into Ukraine. That is changing the long-term profitability and potentially viability of those companies, because in the long term, you can't just keep being funded by the state to provide equipment. You won't make any profit doing that, because ultimately Russia will say, actually, we want this at cost. We don't want you to be making profit and driving Lamborghinis and Ferraris at the expense of our soldiers. You will do it for the price that it costs. So ultimately, this will have a damaging impact on Russia's businesses and all of the people in Russia. Now, if you're a regular viewer of the channel, I don't think any of this data will come as a surprise to you. These are things that we've been discussing in detail over the course of the last 18 months or so. But I think it's worth reminding ourselves that the sanctions are having an impact, because there's a lot of noise in the market. You're constantly hearing that Russia is actually doing really well. It's increased its trade to India and China, and everything's looking rosy from Russia's perspective. But those financial sanctions will have a definite long-term impact. We're already seeing it in terms of the value of the revenue that Russia is earning from its oil and gas exports. But more importantly, and something that we haven't really spoken about a lot on the channel, are the policy changes that the Russian authorities are introducing. These slight changes that don't make the press, that people aren't talking about, where companies are now having to do more work to help the defense industry, where things like interest rates are being racked up really aggressively. The cost of borrowing is going up. The cost of living is going up. The availability of imports is going down. All of that impacts on your standard of living. And the standard of living for people in Russia is definitely lower today than it was 2 years ago before this war started. And what we're seeing is a continued exodus of people. Around 700,000 people left in 2022. and in 2023 it's estimated that around 500,000 left. And if Russia keeps hemorrhaging people at that rate, it's going to lose all of its best workers. And that will have a massively damaging impact on the Russian economy, because if you're losing your best people constantly, you can't just replace them by promoting other people, because by definition, they were your best people. And once they're gone, they're gone. And unfortunately, from Russia's point of view, they're not attracting in many people from overseas. It's not somewhere that a lot of people are thinking about moving to anytime in the near future. So in the longer term, Russia is going to be hurting from losing key people. It's already lost key contacts with multinational companies who were previously both investing into Russia and also helping with new technology. So it's not going to be able to seek outside help. It can only help itself. But the problem that Russia has is that it's so focused on keeping the war in Ukraine going that that's coming at a cost to everything else. And in the long term, that will have a hugely damaging impact on the Russian economy. And until this war ends, it's likely that we will see this long and painful process continuing. So hopefully you've enjoyed today's video. You found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.